Buckle up because the landscape of Wall Street just shifted, and Alphabet is officially rewriting the rules of the game. Forget everything you knew about legendary investors, because Alphabet is now proving to be an absolute titan with massive stakes in game-changing giants like SpaceX and Anthropic. This is not just a tech company anymore, but a masterclass in strategic capital deployment that is leaving traditional market icons in the dust.
Never run out of battery again with the INIU portable charger, the slimmest 10,000 mAh power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Investors are currently watching the charts closely as UBS has officially stuck with a neutral rating for Alphabet. With the stock moving through high-stakes territory and analysts constantly debating the next price objective, every shift in sentiment tells a part of a much larger story. We are tracking exactly how the market is digesting these latest updates and what it means for your portfolio. Hold on to your seats because the AI world is in total shock after Alphabetx just unleashed Astra. By crushing the AGI benchmark and solving complex protein folding problems in hours, this model has sparked a massive debate about whether we have finally reached the age of true artificial intelligence. Major competitors like Microsoft and NVIDIA are feeling the pressure as the industry scrambles to react to this paradigm-shifting leap in technology. The analyst community continues to weigh in with Rosenblatt Securities reiterating their neutral stance, while insiders like CEO Sundar Pichai navigate significant stock moves. We are breaking down the implications of these ratings and what the institutional movement means for the future of the stock. Hit that like button and subscribe to the channel, and smash the bell icon to stay ahead of the next market update. Think Warren Buffett is the undisputed king of investing? Think again. While the Oracle of Omaha built a legendary empire at Berkshire Hathaway, there's a new heavyweight champion wearing the crown, and it's a name you likely use every single day: Alphabet. We're not just talking about a search engine anymore. We're talking about a masterclass in strategic capital allocation that makes traditional hedge funds look like amateurs. Most people see Alphabet as the monolith behind Google, the search giant that commands 90% of global traffic, and the owner of YouTube, the second most visited site on the planet. And yeah, that dominance gives them incredible ad pricing power. But the real story is what they're doing with that mountain of cash. Take a look at Google Cloud. It's currently the third largest infrastructure player in the world, and with generative AI integration driving sales growth to a staggering 48% last quarter, it's clear they aren't just participating in the AI revolution, they're fueling it. But here is where the plot really thickens. Alphabet is arguably one of the most successful strategic investors in history. They don't just dump money into random stocks, they invest in their own ecosystem. Look at their 2015 bet on SpaceX. They dropped $900 million into Elon Musk's rocket company. And with SpaceX now eyeing a valuation near $2 trillion, that stake has ballooned into a windfall of over $100 billion. That's a gain of more than 20,000%, a return that even Buffett would have to tip his hat to. Then there's their aggressive move into AI with Anthropic. By pouring $3 billion into the creators of Claude, Alphabet has secured a 14% stake that could now be worth north of $110 billion. That's a 3,000% return in just a few short years. Even their public portfolio is crushing the market, with massive gains in satellite broadband provider AST SpaceMobile, showing exactly why investors need to stop viewing Alphabet as just a tech company and start viewing them as an investment powerhouse. If you want to know where the smart money is going, stop watching the pundits and start watching where Google is deploying its billions. Are you keeping an eye on their portfolio moves? Let me know in the comments below, and don't forget to hit that subscribe button for more deep dives into the strategies shaping our future. Because at the end of the day, in the world of high-stakes finance, you're only as good as the company you keep, and Alphabet is keeping some very profitable company indeed. Ever wonder if the tech giants are actually running out of room to grow? Today, all eyes are on Alphabet, the parent company of Google, as UBS just dropped their latest verdict. The banking giant is officially sticking with a neutral rating on the stock, Now, it's not exactly a sell signal, but it certainly isn't the kind of high-octane endorsement that sends investors rushing to the buy button. Coming in early this morning, April 23rd, 2026, this move from UBS suggests that while Google is a titan of industry, the current market pricing might have already baked in all the potential upside. It's a classic case of wait and see from the analysts, keeping a close watch on how Alphabet navigates an increasingly crowded AI landscape. What do you think? Is Google still the king of search, or are they playing catch-up in a world moving toward chatbots? Drop a comment below with your take, and don't forget to hit that subscribe button for more market insights. Remember, in the stock market, being right is only half the battle. The other half is being patient. Have we finally crossed the finish line of the AI race? Forget the hype cycles and the empty promises. Alphabet just dropped a bombshell that might have officially ushered in the age of artificial general intelligence. Without a flashy keynote or a dramatic countdown, they released Astra, a model that isn't just smart, it's fundamentally different. On April 23rd, the research world collectively lost its mind when the archive preprint for Astra landed. We're talking about a 96.8% score on the AGI benchmark, a test specifically designed to stop AI from just memorizing patterns. To put that in perspective, OpenAI's Q model held the record at 87% just months ago. Astra didn't just beat that, it crushed it. But the real headline here isn't the score, it's the lack of fine-tuning. For years, we've had to hold an AI's hand, pointing it at a specific task. Astra doesn't need that. It's built on a long-term memory architecture, meaning it's not just recalling data, it's reasoning in real time. Most jaw-dropping proof. It solved a novel protein-folding mystery in just 3 hours, a task that would keep a team of human researchers occupied for years. That's the Lovelace test 2 in action, and it's a game-changer. While the stock market is scrambling to reprice the entire sector, sending Alphabet up while rattling the hardware giants, we have to keep our heads cool. This is still a preprint, not a peer-reviewed certainty. We need to see how it handles independent, third-party stress tests. If this stands, we aren't just looking at a better chatbot. We are looking at an autonomous system that fundamentally changes how we do science and business. The question isn't just about benchmarks anymore. It's about what happens when this kind of intelligence starts operating outside the lab. What do you think? Is this the breakthrough we've been waiting for, or is the industry overpromising again? Let me know your take in the comments below, and make sure to subscribe so you don't miss the verification fallout. Remember, technology doesn't just evolve, it accelerates, and we're all along for the ride. Is Alphabet still the king of the tech hill, or is the shine starting to wear off? That is the big question on everyone's mind, as Rosenblatt Securities just reiterated a neutral rating on GOOGL, setting a price target of $357. Now, that might sound like a bit of a snooze fest, but don't let the neutral label fool you. There is a whole lot of drama happening under the surface. The street is deeply divided. While Rosenblatt is taking a cautious stance, heavy hitters like Raymond James are shouting, "Strong buy" from the rooftops. When you look at the consensus, we are talking about 46 buy ratings versus only 4 holds. It seems most analysts still see the potential for upside, but the price targets are all over the map, ranging from conservative estimates to much bolder predictions near $405. With shares opening around $339, it is clear that the market is still trying to decide exactly how much juice is left in this giant. Let's talk performance. Alphabet isn't just surviving, it's crushing expectations. Last quarter, they pulled in $113.83 billion in revenue, handily beating analyst projections. With a massive net margin of nearly 33%, the company remains a financial powerhouse. But as with any massive stock, there is an insider element to watch. We've seen CEO Sundar Pichai and director John Hennessy parting ways with a significant chunk of shares recently. While it might look like a red flag, remember that these are planned sales. But it does make you wonder if the insiders are cashing in while the valuation is at these heights. Institutional money, on the other hand, is still piling in. From CIBC Bancorp to World Investment Advisors, big money managers are increasing their stakes, signaling that the smart money still believes in the long-term thesis. So, what's the move? Alphabet is a behemoth, from search and YouTube to the massive growth engine of Google Cloud. It's an essential part of the modern digital infrastructure. However, if you are looking for where the next explosive growth is hiding, you might want to look beyond the obvious. We've been tracking what top-tier analysts are whispering about, the under-the-radar picks that haven't hit the mainstream hype cycle yet. Alphabet is a foundational play, but it might not be the most exciting one on your watch list today. If you want to see the 5 stocks that pros are backing right now for potential outsized returns, check the link in the description. At the end of the day, in a market this volatile, do you play it safe with the giant or hunt for the next big disruption? Let me know your thoughts in the comments.